So my trading bot just pulled the trigger on a $1.2 million trade while chaos is breaking out everywhere else in the markets. So I'm going to walk you through what's happening inside this live position right now, why the system's logic never changes with size, whether it's a 10K account, a 50K account, 100K, $1 million or more, and what you need to know if you want your strategy to survive a real market meltdown. So right now, if you scroll through YouTube or X, Twitter, or any trading group, you'll see the same thing everywhere. Charts are calling for a deeper collapse. People are insisting the top is in. The fear and greed index is at an all-time low. Comment sections are filled with panic, disbelief. People are saying that this time is different. And it kind of feels like the entire market has convinced itself that we're entering a new bear cycle. And that's exactly why this moment I think is so important, because while the sentiment is collapsing, while everyone is showing charts that look absolutely terrifying, while retail is panicking and leverage is getting absolutely wiped out, I'm not worried at all. Not because I'm optimistic, not because I believe price will bounce, not because I think I know where the market is going. I'm calm for one reason, and that's because my system, it doesn't care about fear. It only cares about structure. And right now, even though the market looks chaotic, even though the candles are red, even though social sentiment is screaming doom, the algorithm sees something very different. And it sees volatility signatures that form an opportunity. It sees drawdown levels that are still mathematically safe, and it sees price well above power law quantiles that are dangerous. As you can see, the price could come all the way down to here before we even need to think about defending the position. It sees a market that's emotional, not structural. And that's why I can sit inside a live $1.2 million position during a collapse and stay absolutely calm. This is what I was doing today. I was actually spending the day with my son at the beach, not because I'm brave, but because the system was engineered for exactly this type of environment, and I don't need to do anything. It's fully automated. So this moment, this panic, the fear, the confusion is precisely where traders' emotions become their biggest liability and where engineering becomes the advantage. Now, here's a problem that most people don't see with algorithms or bots, and everyone thinks that their bots work until they try to scale it. And that's why I want to show you a position, $1.2 million, because that's one of real size. You see, it's easy to run a bot on a $5,000 account like most people do on YouTube and kind of feel like you've cracked the code, because you can close a position manually if it gets too uncomfortable. You can simply add more funds if it moves against you. Drawdowns feel small, risk feels manageable, and because of that size, risk management is almost optional. And that's why people expect 10, 20, or even 30% a month, which is absolutely insane. It's because they're not managing risk, they're just managing smallness. And smallness can forgive every single mistake. That illusion shatters the moment you try to scale. A bot that feels safe at 5K becomes unstable at 50K. One that feels consistent at 20K falls apart at 200K. And the strategy that looked bulletproof at 100K can get destroyed at $1 million. Because at size, you can't just close the position. You can't just top up margin, and you can't just ride out the volatility. And you can't rely on hope, luck, or even timing, because everything becomes magnified. Every decision matters. Those drawdowns are real, exposure is real, and risk is absolutely real. And that's the problem that we had to solve at Minotaur Trading Systems. Not how to make more money, but how to build risk management frameworks that still work when the numbers get really, really big. And that's why my system exists. And the same principles using our system protect a 10K account, they protect a 50K account, a 100K account, even $1 million account, and even a $100 million account if we get there. Because the logic actually doesn't change with size, the math doesn't change with size, and the risk rules that we've created and the frameworks don't change with size. And that's exactly why the algorithm and the trading bot right now is able to sit inside a live $1.2 million position calmly and systematically, because it has to, because that's exactly what we've built it for. And as you can see, we are running this on our own accounts. This $1.2 million position is a live position during a market collapse. Most bots are only safe because they're small, almost none survive. So right now, as the market keeps selling off, the algorithm, as you can see, it isn't panicking, and there's a very specific reason for that. As you can see, we've entered a base order and continue to enter into safety orders. We have our weighted average price here in the orange line, and of course, on the green line there is our take profit. Every micro decision inside this live $1.2 million position is anchored to the power law structure of Bitcoin, not any kind of short-term fear. And we didn't just read about that structure in a paper or watch it on a YouTube video. We actually built this system directly alongside Giovanni Santastasi, the physicist who discovered Bitcoin's power law behavior and developed the models that everybody references today. I've actually read 2 books that his name has been mentioned in. And Giovanni didn't start as a consultant. He actually began with us as a client. He used our system. He saw how closely it aligned with his research and eventually joined the team to strengthen the model integration even further. To be honest, when we discovered the power law, it was like discovering the missing piece to our algorithm because it gave us the risk management framework that we actually needed. So now when the system sees price falling, when social sentiment is collapsing, when traders are convinced that we're heading into a new bear market, the algorithm is looking at something else entirely, and it's looking at the long-term mathematical structure. And according to that structure today, Giovanni's structure, we're still well above the deep bottom quantiles. Most traders think in terms of fear, funding rates, or narratives. We think in terms of statistical distance from these structural flaws. And that's why the bot isn't stressed. That's why I'm not worried. And that's why the system is behaving correctly as designed during a $1.2 million live position. It understands where the price is in the broader structure, not just in this short-term chaos. So this anchor prevents panic, it prevents emotional scaling, it prevents overexposure at the wrong time. The system defends only when the math says it should defend, not when the fear of the person says it should. So before we wrap up, I want to give you one quick story. It's nothing dramatic, it's just something that I honestly want to share with you. A few years ago, I had a much smaller account and I caught myself doing what every trader does. And that's second guessing my entries, hesitating exits, and reacting to volatility instead of managing it. And it wasn't a blow up, it wasn't catastrophic, it was just this inconsistency that I hated. And inconsistency is just what kills long-term results. So that was the moment that I realized I didn't need more indicators or better predictions. I just needed better engineering, because humans don't break from the price, we actually break from the uncertainty. And that's what's going on today when you go on social media and watch all these videos on YouTube. And that's exactly why my system exists. And what makes our approach different isn't some kind of secret indicator or some kind of magical prediction model. It's actually the architecture. So let's just go through that architecture step by step. Number one, we don't predict, we react. So the system doesn't try to guess the future, it responds to the real volatility in real time. Number two, we scale defensively, not aggressively. So DCA isn't used here to chase exposure, it's used to fix the position when price actually challenges the entry. Number three, we optimize weighted average price, not any kind of perfect entry. And this is why the bot stays stable inside a $1.2 million live trade. Number four, everything is anchored to Bitcoin's power law structure. This keeps the system calm even when the market isn't, because we can see the 30,000 foot view of this whole thing. And number five, the logic of our system is identical when you plug in, whether you're trading a 10K or a $1 million account. And that's the real advantage, the scalability without any of the added risk. So if you're watching this video and I'm going to watch this trade unfold, and of course I'm going to do an updated video on the closes and when we exit this trade. And if you want a system that handles volatility like that, then your next step is to simply book a call with our team. We're going to talk you through the logic. We do a free consultation call. You're going to see how to deploy your own engineered trading bot. And we're going to help you plug into a system that thinks clearly when markets don't. And the takeaway from this is simple. Your results change the moment your decisions become engineered instead of emotional. So if you want that shift, then you need to start by booking a call in the description below, and we're going to show you the rest.